If you don't want to end up in jail or taxed to homelessness, you need to know the proper legal structure for your business. I don't know is not an excuse. So the real question is it LLC or an S-Corp for your business? Depending on where you're at financially, either one can make you broke if you don't know what you're doing. With my strategy, you'd be considered a non-plant touching cannabis brand. And what that means is you're not growing the weed, you're not extracting it, you're not packaging it, you're not rolling the joints. You're really not touching any of the cannabis components whatsoever. All you're focused on as the owner of the brand is your branding, your marketing, your sales, and your relationships. So this is important because not everybody can do everything. And whether you're the license holder or you're the brand, there's way too much to be doing to do all these components precisely and accurately. So you're gonna be partnering with licensed operators that produce and distribute your product to the stores. And you're simply managing your sales team, doing your marketing, and building that brand value, building the brand reputation, and how consumers interact with your brand. And that can be done through your merchandise, through your social media marketing, through your event marketing, through retail marketing. There's also additional marketing strategies, but those are the core 4 ones that I really like to focus on. And I call that quadratic marketing. And by doing that, a little bit, each component of that quadrant feeds into the next one. So if you're coming out with some new merchandise, some new shirts, you're gonna document that. You're gonna be posting it to your social media marketing. Then when you're in the stores doing retail marketing, you might be offering these shirts as a free giveaway to consumers that buy your brand for the first time. And then at event marketing, when you're doing events for your brand, you're gonna be showcasing these shirts to have them on sale at your booth, as well as having your team wearing them. So you see how these 4 quadrants are all interconnected. So the main focus of this strategy is to partner with a licensed supply chain, which is gonna be your cultivators, the manufacturers that produce your products, that roll your joints, that package your flower, that fill your carts, as well as the distributors. They're gonna take those finished products and deliver them to the retail stores that your sales team sets up those sales for. And by having your sales team in your control means that you have total control over the growth of your brand. You're not gonna be pigeonholed by having to deal with the problems of running a cultivation. You're not gonna be dealing with the monotonous overhead that a manufacturing facility has. Having a distribution license is a huge, huge headache in terms of the logistics, the paperwork, the invoicing, the taxes. All this stuff is a burden that's gonna take away from your bandwidth to be able to focus solely on your licensed brand. And by taking that brand and really embracing the responsibility that you have to build that brand to the public. And this is not something to be taken lightly. And I feel like in this industry, a lot of people put the brand as an afterthought. They think they need that cultivation license first, the manufacturing license. In some cases, some people think they need to own all these licenses and then focus on the brand. That is completely wrong. If you have your brand going, that brand value is the most important. You can have any license you want, manufacturing, cultivation, distribution, doesn't matter. But if you don't have a solid quality brand that can actually move products off the shelf in these retail stores, it doesn't matter what license you got. So focus on your branding, focus on your marketing, focus on building that core foundation for your brand. And then from there, you can scale bigger and you can create these supply chain partners that can scale with you. The second point to this is that you have a lot of benefits by using this model. The first one, the huge one that a lot of people don't know about, is you're not subject to 280E. And what 280E is a federal tax code that doesn't allow you to take any business expenses. And this tax code was put into place in the 80s when a big cocaine dealer was brought to trial. He was convicted of selling cocaine. However, in his taxes, he still wrote off all his expenses, his yachts, his mansions, his trips, parties, all this stuff were business expenses for his cocaine business. And so there was no rules against this. So he won that case. Even though he's convicted of selling cocaine, he won the case where he didn't have to pay the taxes on all those millions of dollars he made. And he made a fool out of the IRS. And so the IRS made sure that this would never happen again. And in doing so, they created the 280E tax code, which says you cannot write off any business expense related to a Schedule I federal substance. So cannabis is a Schedule I substance, as well as heroin, as well as cocaine, as well as LSD, and many other drugs. So this was established during the war on drugs, where they lumped cannabis in as the same dangers as heroin and cocaine, even though we all know it's not. So what this does is, as a license holder, if you own a cannabis license, a manufacturing license, cultivation, distribution, anything, you're not allowed to write off business expenses on your federal tax return. So what that means is you can't write off your rent, you can't write off your employees, you can't write off your transportation costs, you can't write off your phones, you can't write off your insurance, none of this if you own a plant touching license. So the way around this is you can only write off your expenses through cost of goods sold. But with a license holder, the only person with a lot of cost of goods sold is the cultivator. So if you're a manufacturer, distributor, or even a retailer, there's not going to be a lot of cost of goods sold. So you're going to be burdened with these 280E expenses. So that's where, as a brand, since you're only doing branding, marketing, and sales, you're not touching the cannabis ever. You're just literally doing the branding, marketing, and as sales, you're literally just walking into the stores. Your sales team is setting up these orders, but it's the distributor who's actually touching the plant and dropping those orders off. So they're the ones subject to the 280E clause. As a brand, as your LLC or corp, your S-Corp, whatever your accountant advises you to set up, as the brand, you can write off all your expenses because you're not touching any cannabis. There's no federal Schedule I substances that your brand touches. You're just marketing for one. However, all your marketing expenses can be written off as a true expense. So this is a huge win for a brand. Number 3, the best legal structure for your business utilizing this model. LLC. This is good for early stages. If you're a single solopreneur, you don't have business partners. It's also good if you're just getting started, you don't have a lot of income coming in yet. This is going to be the easiest and cleanest way to account for your income, your expenses, and your taxes. So basically the LLC is going to pass through all your income to your personal, which means as an LLC, your main strategy is going to be to increase your expenses as much as possible. So if you have $100,000 come in through your LLC as revenue, as income, you want to get as close to $100,000 in expenses as possible. And by doing so, you're only going to be taxed on what's left over. And that'll be passed through to your personal. And if you have other businesses that are doing the same strategy, that can all be applied as potential losses on your personal to lower your overall tax bill. Again, this is not financial advice. You need to have a qualified, quality CPA, a certified public accountant, and they're gonna give you these strategies on how to set it up properly. And then each year, you're gonna give them all your bank statements, all your financials, all your receipts. They're gonna go through everything, and they're gonna structure your tax return to lower your tax liability as much as possible, all within the law. And they're not gonna be doing any shady stuff. This is all legal. You're allowed to do this. This is how even the biggest people, it's how Trump doesn't pay taxes, is you increase your expenses and you utilize your expenses for your business growth. So I'm not saying to go out and just throw parties and go pay for strippers and go on yacht trips and all this. That's not an expense. I'm talking about building your business on key expenses that's needed, whether that be new packaging for your next product drop, whether that be building out your website, building out your team, all your contractor costs, doing event marketing, going on trips for these events, getting your products into the stores, doing the in-store marketing. So a lot of your expenses for the brand is gonna come from marketing. Marketing is a blanket term. You can do a lot of things for marketing. However, you want to make sure that it's going to move the needle on the bottom line of your balance sheet. You don't want to just be doing marketing stuff frivolously just for the hell of it. And that's what a lot of the corporate brands did, especially early on, because they had big corporate money behind them. So you see them just blowing money left and right on, in my opinion, somewhat silly shit that they don't need to do, that they could have spent that money better in other ways. So expenses are all going to be from packaging, marketing, product development, even buying cars. For instance, if you buy a car, put it under your business, and you put some kind of logo or signage on that car that shows that that car is related to your business, that can also be a write-off. This chain, for instance, my other chains, they're all my logos, the actual official logos. And then I have those, my jeweler invoices my company for that. So this is a marketing expense. So you see how you can combine expenses. I didn't go out and I didn't go spend my hard-earned money on this. I went and spent business money on this. And so by doing so, it lowers my tax bill, but it also gives me something that I can market with to help increase my income in the future. So it's always a game of what expenses can I strategically lock in and actually account for, so that way they account against my income. So this is the way an LLC works. You're gonna be increasing your expenses, and your personal tax return will absorb whatever's left over. You pay taxes on that. The downside to the LLC is you're gonna have self-employment taxes. And these are where these state governments really get you, is they charge you a self-employment tax for not being a W-2 employee. And it's kind of fucked up for doing that. So they're basically saying, since you're not paying W-2 taxes and you're a business owner, we're gonna charge you a self-employment tax for being self-employed. So the LLC, you are subject to that, which isn't ideal. However, in the beginning, it's a much cleaner and easier strategy, and it's a small price to pay to build up properly. So the next structure is an S-Corp. And this is where you'd be exempt from the self-employment tax. However, you don't have members on a corp, you have shares. So you're selling shares of stock to that corp. And this is getting a little bit deeper, more complex, and I don't want to get into that for this video, but an S-Corp is a viable entity to scale your brand from. But you're really not gonna have the added benefits from the S-Corp until you start seeing more than $50,000 in profit from your business. So that's why I say in the early stages, it's easiest and cleanest to just start as an LLC. You just go from there. You can always shift to the S-Corp when you need to. Or the hybrid model, which is how I have mine set up, is an LLC taxed as an S-Corp. So by doing this, you get kind of the benefits of both worlds. You get the ease and simplicity of having the LLC. However, you get some of those benefits, the tax benefits of being taxed as an S-Corp. However, the LLC is still the entity. So it's a membership. You're basically selling a percentage of membership to become into the LLC. You're not selling shares of stock. And that's the key differences between the two. So again, do not take my advice for financial advice. I'm not giving you financial advice. I'm literally just explaining some of the options that I had to go through, that I had to decide on how to properly set up my business. And I advise you to do this with your own CPA, certified public accountant. They'll walk you through your options, the pros and the cons of both, and how to set it up. But pretty much it's either gonna be an LLC, an S-Corp, or an LLC taxed as an S-Corp. Number 4, and this is the long-term play. This is for multi-state licensing. And so there's a difference between having supply chain partners versus licensing the likeness of your brand to a cannabis license holder. Again, I'm gonna say that again because we're using license in 2 different contexts here. So licensing the likeness of your brand means you're granting permission for somebody else to use your brand's logo, how it looks, the likeness of that brand. You're licensing permission for them to use that how they see fit. So it's the same way that Jordan licenses the likeness of his name to Nike to use for Jordans. Michael Jordan gets a royalty for doing that. So when you do a licensing deal, this is what a licensing deal is. You're licensing the likeness of your brand to a cannabis license holder in another state that actually does all the operations for you. And so basically all you become is you're just selling them packaging. You're selling this licensed operator in another state your packaging that's branded for your product, and you're giving them your SOPs on the product formulation, how it's made, the requirements around it, quality control standards. It's an important one because some of these brand licensing deals, the operators will cut corners and they'll try to put out subpar product under your brand just because your brand can sell product. However, it's gonna ruin your brand value. So you wanna stay on top of your quality control in these licensing deals. Make sure that they can even achieve it from the start. So in a licensing deal, it's the easiest way to expand across states is you're gonna license the likeness of your brand to the cannabis license holders in these other states. They're gonna run all operations. They're gonna even handle the sales for you. All you're gonna do as the brand is just do branding and marketing. Mistakes to avoid. I'm gonna start with the biggest mistake that I've ever made, paying taxes. And that's running your money through a personal bank account. This is the worst. Let me reiterate, this is the fucking worst thing that you could ever fucking do. Sorry to be bold and cuss like that, but I really got to get this point across because it happened to me back in 2019. I put a bunch of money into my personal account because it was a sole proprietorship. It wasn't an LLC, it was a sole proprietorship, but they still count that under your personal. And so what happened, I ended up paying $6,000 in taxes on that account. When my accountant saw that and he had to submit it because the damage was already done, he explained to me if I would have put that into my LLC or S-Corp account, that $6,000 tax bill would have only been $600. So I literally paid 10x of what I owed the government for nothing, literally for putting it into the wrong bank account. Literally because at the time I didn't know. But what happens, what I see a lot of people do is they'll start their LLC, but they don't necessarily make the business bank account to attach to it, and they're just using their regular account still. It's the worst thing you could ever possibly do. Or thinking that by setting it up under sole proprietorship, you're good. Because technically you are. You can run your business out of a sole proprietorship and you're fine. You can literally walk into the bank right now, not have to file any corporate documents, walk into the bank, tell them you want to open a business account as a sole proprietor, and they'll open it for you with no tax documents, no EIN number, no nothing. But it's gonna be under your social security number, which is the worst thing you can do because now it's on your personal tax number. And you cannot write off all these expenses like if you were a business since it's attached to your personal social security. So do not make that mistake. Make sure before you put any money into a business account, it's a true business account and it's not a sole proprietor account. Okay, next mistake is not having any written agreements with your supply chain partners. And not only is that the obvious that like maybe they can screw you over or steal your brand or do something like that, that's always a possibility. That's why you want these agreements. However, taking it a step further is like I explained in the beginning of the video, your brand is not plant touching. So if you don't have these agreements signed, you could potentially be liable for a lot of different things. And I say a lot of different things because by not having any contract protection, you never know what could happen. Things out of left field could come in. Someone could eat one of your edibles, get sick, and then sue your company. But if you don't have it set up properly, they might come after the brand rather than the manufacturer who actually manufactured that product. But if you don't have those contracts to show like, hey, my liability stopped at just providing them packaging. I didn't make the gummies, I didn't formulate it, I didn't package it, nothing. And so technically, if someone got sick, that should go back to the manufacturer's liability. However, if you don't have the right contracts to document that, you run the risk of getting a lawsuit applied to you too. And these lawyers are fucked. Like they'll come after you, especially knowing that you're a cannabis brand in the cannabis industry, making tons of money. That's how they look at it. So they're gonna come after everybody they can. They're gonna name everybody in the lawsuit they can. And if you don't have these protections in place, you're at risk for getting sued for any number of things. This is exactly what I teach inside of Cannabiz Academy. How to start and scale your licensed cannabis brands without owning a license. And I teach this by utilizing the right supply chain partners, as well as the right legal structures to protect and, more importantly, grow your brand, grow your business nationwide and eventually worldwide. So if you want access to the contracts, the full brand build out, the supply chain connections, the step-by-step blueprint on how to actually assemble this properly, as well as any of the connections needed, whether that's from the accountants, the manufacturers, the distributors, the cultivators, I give it all to you. So that's what Cannabiz Academy is about. Thanks for watching. Click the link below if you want to start and scale your $1 million cannabis brand with me.